Welcome to the 2022 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this Saturday night, February 26, 2022 edition. We're getting right into it today, folks. Listen, the jobless claims total 232,000. That's slightly less than expected. And the fourth quarter GDP has now been revised upward to 7% on the total. Jobless claims have been steadily lowering. That's some good news, a bright spot in this the steady decline that we've been experiencing in this economy. So continuing claims hit their lowest level in 52 years. Well, you have to understand the numbers are being manipulated because a lot of people have given up looking for work, and those who have came back from the health crisis hiatus are counted in those numbers too as well. So it's more they were more like on a furlough or break, and or either that or now that they haven't found a job. This is what the numbers are showing here, and so but with oil prices on the rise now, as you can see, crude is approaching $100 a barrel. Some forecasters have said it's going to go to $120 a barrel by the end of April. That could translate to a lot of people $4 a gallon gas in places that we haven't seen that outside of California and all the other high cost of living areas. It could spell a lot of trouble for people in this summer. And the hyperinflation continues, ladies and gentlemen. And so the weekly jobless claims, all of that is good news. But the bad news is that hyperinflation will continue. And this is from the Department of Labor and Bureau of Statistics own forecast projecting here. As you can see, inflation is still at above 7%. The Fed is supposed to come out in 2 weeks, as you know, and maybe give a 25 basis point raise to the interest rate. But what is that going to do to the real inflation numbers? Real inflation already is at 18%. And so, unless they're going to raise rates by 5 or 6, 7, 8% to get it up to near, we're still in negative interest rates. And so that means that on the bad side of this thing here, that means that continuing claims will continue. As a matter of fact, the home sales, surprisingly, CNBC is reporting that home sales jumped 6.7% despite a record low supply. Now, this is another thing that's going to be very, very interesting to watch, ladies and gentlemen, because the housing market was red hot. Then it started to cool down a little bit as we headed toward the fall of last year. It started to cool down. And now that mortgage rates are 4%, approaching 4% above 4%, when is going to be the breaking point for this housing market? As mortgage rates continue to rise, the 10-year and the 2-year Treasury bonds continue to rise as they approach 2% and climbing. The housing market may not expect a big crash in the housing market, but I do expect a big cool down as this is going to be hurting a lot of people looking to sell their houses and get out of a tight market here. And supply, of course, is also an issue. But the builders are building these houses at rapid speeds. Have you noticed that? And these places are, you can't find concrete anywhere. Lumber has gone up. They're building the houses the cheapest way possible. As you know, it's just basically wood and plastic siding, basically this kind of manufactured siding, and there's no real brick anymore. It's mostly this kind of plastic fake brick that they put out on the front of your house. And so if a hurricane or tornado or something, if you get a strong wind tonight, you can lose your shingles, you can lose anything. I mean, I'm not talking about a major hurricane. If you get just a borderline tropical storm, 50, 60, 70, 80 mile an hour wind, it can take away half your roof, or because things are not being built they're built to the minimum codes. And that's another thing too. The builders are getting away with building these houses to the minimum code just to pass the permits, inspections, and blah blah blah, and they selling it for double, selling it for 450, 500,000, you name it, 350. And some of these areas where the housing value really is only like 180,000 or less, but they're selling these things for 350, 400, $500,000 off the market. And so it's going to come to a head with this housing market. I'm sure you've seen it in many areas in Vegas and Phoenix and LA and San Francisco, over in the East Coast, from DC up to Boston, and even down south. Housing down south are ridiculously overpriced in places like Orlando and Miami and Fort Lauderdale and all that kind of stuff. So it's going to come to a halt, and this is what's going to happen here. And then on top of that, we have the Ukrainian officials, according to Market Watch, urges Apple, Google, and Netflix to cut our business with Russia. As you know, that we're not going to get political here. I'm not a financial advisor. I'm not a political advisor, but I'm just saying that with the world is connected now, we're in a globalistic economy, okay? And so when they put sanctions on Russia, when the U.S. put sanctions on Russia, it affects everybody. And as you can see, our gas prices and everything going up. But at the same time, what is this going to mean when we start getting into protectionism? This is exactly the thing that happened in the Great Depression. Every country was out for themselves. But this is going to be a worldwide depression, as you know. And it's not just the U.S. that's going to be affected, or the UK. It's going to be everybody. Every nation is going to feel this, especially the G7, the G20, the G8, the G20. Is going to feel it, the nations. And but some are going to feel it more than others. And like I said, we haven't been used to having hard times over here. And so this supply shortage that you keep hearing about, this is going to be a long thing. This is going to be the next 5 to 10 years with this supply shortage. You have to remember, all of our stuff is made over there, not just in China, but in those countries, the Asian bloc countries, and also, that would include Russia. So our stuff is coming from Thailand, China, Singapore, right? The chips are coming from Taiwan, semiconductors. Okay, if they decide to get together and form their own pact, like we just decided to, sign these deals with the Trans-Pacific Treaty deal that Obama signed, President Obama, former President Obama signed with the Asian countries. If they get together and decide, look, we're no longer going to supply America with all these super semiconductors and all these products, they can do that. And Russia and China can get together and form a conglomeration, and also India, who supplies most of our medical pharmaceuticals. They can get together. And what is that going to mean for America when we're not producing anything? When all of our factories are gone, we've outsourced everything. That's going to mean a hard time for America, despite how many sanctions they put and all of this diplomatic talk. It bottom line comes down to its production. And right now, Russia, China, India have the upper hand on production, and they have the population to do it. And so you may say, oh, well, they have to sell it to the United States. They have to sell their goods over here to the Western world. No, they don't. They do necessarily don't have to do that because their people are used to living at a super low standard of living, and they're accustomed to, and they have a growing middle class. A lot of these countries, developing countries as well. And so, we're going to be in a situation where we're not producing anything, and that spells basically a long-term depression. And I don't know what way to say it or what way to cut it, but that's pretty much what we're looking at. And it's gonna be what make this depression so different is that not only is people not apt to help one another in America, but another thing, individualism. But another thing's gonna make it bad is that there's gonna be a slow draining depression of resources. And so if you what you don't have right now, you're not going to be able to get in a few years. So you take little things for granted, like maybe, I don't know, food or medicine or little supplies. You won't be able to find those in the shelves of stores. It's going to be in very limited quantities and prices that are going to be unbelievably high. So get ready, stay prepared, ladies and gentlemen. I just want to touch base with you tonight on a few topics. Thank you for listening. This is Preach to Me signing off, and I'll see you in the next video.